AI is incredible. It can teach you how to fry an egg and even write a poem, pirate style. Yarr! But it knows nothing about your work. Slackbot is different. It doesn't just know the facts. It knows your schedule. It can turn a brainstorm into a brief. And it doesn't need to be taught. Because Slackbot isn't just another AI. It's AI that knows your work as well as you do. Visit slack.com/meet Slackbot to learn more.
Walmart Business saves you time, money, and hassle, which means you can focus on what really matters. Like putting the money you save back into what you do. Spending more time training your team, filling orders, and finding new clients. Anything and everything, right down to, oh, that's one, choosing the best hold music. Walmart Business. It's the Walmart you love, now for your business. Learn more at business.walmart.com.
It is Monday. My feet are cold, but my heart is warm because I get to spend time with you two.
God, you're really bad at lying.
What are you talking about lying? This is like a Hallmark movie. We're beginning February. What's more romantic than spending a day recording with you guys? Oh, so nice.
Did you just say February?
February.
Isn't it? There's an R in there.
February.
There's an R. Come on. You know what else there is?
There is, but I mean, only weirdos say it. It's like saying salmon.
I've said that before too. I may have, although I may not remember it. That's a story for another day. Let's raise our mugs.
Raising.
Because we got some troops we need to salute.
Saluting.
On behalf of the men and women making podcasts in Mom's basement and the men and women trying to stack Benjamins, here's to all the people that kept us safe all weekend long. Thank you for all you do. Let's go stack some Benjamins together now.
Thanks, everybody.
Stacky, stacky.
Joe, the bottom of your mug is red. Does that mean you're excited to see me?
Oh, it's Monday, baby. It is Monday. Start of the new week. It's raining outside. It's cold. It's gloomy. There's every reason to not be excited. But guess what, baby? We are excited. We're motivated. We're dangerous and disciplined. We have a new week in front of us. A new week to chase after every dream we want. A new week.
Live from Joe's mom's basement, it's the Stacking Benjamin Show. I'm Joe's mom's neighbor, Doug, and February. Quiet candlelit dinners, romantic evenings, and prepping my taxes. Oh, yes. The good times. So what's different this year on today's show? The 7 big tax changes that might put a bigger refund in your pocket. What are they? Get your pens ready because we'll cover every one of them on today's show. And that's not all. This is a variety show, ain't it? I'll also share a TikTok minute about how to save money while you're traveling, and then I'll share some twangy trivia. And now, two guys who are romantic old softies about money, it's Joe and O-J-J-J-J-G.
Hey there, stackers. We are your romantic tax prep companions. Although, you should consult your tax advisor, even though you listen to the Stacking Benjamin Show. I am Joe Saul-Sehy. Happy Monday. We're super happy that you're here. Sit back, relax, grab your favorite utensil to take notes. There's a utensil to take notes since you guys are the
No, I think it's utensil.
Grammar police.
Like your tinsel, as in,
yeah.
Did you put your tinsel on the tree yet?
That's right. So that your house burns down. How long has it been since they put tinsel on a tree? We used to do that when I was a kid. Did you?
Yeah. In-laws.
Oh my gosh.
Wow. That is a blast from the past. But we're not going to get into that because, it is officially February. It's officially tax prep season. Time for people to go.
I think you're a few days behind if you're waiting until the 1st of February.
To get going on your taxes?
Yeah. Shouldn't you be rocking and rolling already? Nobody else has their stuff done January 2nd, like all lined up in a big pile, like ready to scan and send to the CPA. No,
what's wrong with you if you haven't done that yet? That's 100% you. I've known you for how long? It's 100% you. January 2nd, you're like, let's go. Come on.
Actually, I have changed my opinion about taxes. I used to be the perennial like extension filer, like, oh, I'll just extend it. And all that happens when you do that is you just extend the pain. First of all, you still have to pay in April. And so you have to like kind of do your taxes anyway to get an idea of how much money you're going to owe. So you're like 90% of the way done. And I understand sometimes you can't. If you have a tax form that doesn't come until August or something, you got to wait. But for the vast majority of people, extending just kicks the can down the road in the sense of like, now you just ruined your summer.
Yeah.
Because summer's going to come and this can be like, right, the kids just start going back to school and you're going to go, oh crap, I still have to do my tax. Oh, frick. And now you're trying to find stuff from 20 months ago to get to your CPA because that's due on October the 15th if you're filing your personal return. So I try very hard to be the first person in the door. So I do. I send all the business stuff is already gone to the CPA the second week of January. Like QuickBooks is updated. The banks are reconciled. Start going.
Well, that wonderful conversation we had with Hannah Cole back at the beginning of December, OG, she even said, if you're one of the first people there, you get your tax person when they're fresh. Like if you're working with a professional, you get them when they're fresh. You get them when they're excited. If you're taking it in there on April 8th or April 10th.
Well, I mean, the reality is, look at the industry. There's not enough people. There's not enough tax prep people, whether it's contract workers, during the busy period or CPAs, enrolled agents. There's just not enough of them in the country. So when you get to March or April, you're back of the line. So I want to be done. I want to start that audit clock, baby.
Get that done. Have my next 11 months to myself. Not worrying about my taxes. Love
I know
that.
you guys. People are yelling right now. They're like, "But Schwab doesn't send my 1099s until the middle of February. I can't." Okay,
just get the rest of it ready.
And be done with everything else. Like have it all ready to go. And then when you get the 1099, put it on the pile. Bang, done.
I had some other news that came up recently. I found out how I got on that text stream where somebody you don't know texts you about every other day, ask you how you're doing, or do you want to meet for coffee, or some other phishing scam that ends up with my bank account empty and didn't actually end up going out for coffee. When I signed up for our new product, the Vault, I was our first user, by the way. Immediately, I saw exactly what an awesome tool this was because it told me, bam, your phone number was lifted off the dark web beginning in mid-2024. And that was the same time that those texts appeared. So I began then very quickly. Well, actually, I didn't do anything. The Vault started taking me off these lists, 56 of them in my case, but there's 3 or 4 more that it finds all the time. And the cool thing, that's about 1/20th of what the Vault does. Check it out at stackingbenjamins.com/vault to see how it works. Finally take control of your subscription management, identity protection, getting removed from those trash lists, and controlling your credit, all of that. stackingbenjamins.com/vault. We got a great show today, but we do have a couple more sponsors who keep us keep it on so that you don't pay a dime for any of this goodness. Doug, as I always say, Stacking Benjamin Show, always free and worth every penny. That's why we have our sponsors. So let's hear from them. Was that a giggle? Was that a... There it is.
The Pillsbury Doughboy. That's what I sounded like right there.
You did. Like somebody that just poked a finger right in the stomach.
Round belly.
We're going to hear from them. And then we're diving into helping you maybe keep a few more bucks in your pocket this tax season. Spring cleaning's made its way to my closet. This time of year always makes me rethink exactly what's in my closet. Really want to keep fewer things, but I also want to keep better ones. I want to feel confident, and to feel confident, looking the part's a big piece of that. So I want pieces that are well made and that are easy to wear all the time. And that's why I keep coming back to Quince. The fabrics feel elevated. The fits are thoughtful. Pricing actually makes sense. As I'm swapping out and I'm cutting, the few additions I'm making all come from Quince. Quince makes high quality everyday essentials using premium materials like 100% European linen. They're insanely soft, flow knit activewear fabric. Their men's linen pants and shirts are lightweight. They're breathable. They're comfortable. Basically the perfect layer for spring. The pants strike the right balance between laid back and refined. If you saw the video of me on stage at Retire Meet, those pants are from Quince. It was really cool. I came off stage and Christine Benz from Morningstar getting ready to go on behind me and said, love your pants. Not generally. I absolutely love them. I think they make me look put together without trying too hard. And they're Flow-Knit activewear, moisture wicking, anti-odor, soft enough that you'll actually want to wear it all day. The best part is their prices. This is important, stackers. They are 50 to 60% less than similar brands. How? Quince works directly with ethical factories, cuts out the middlemen, so you're paying for quality, not brand markup. Everything's designed to last and make getting dressed easy, which is another thing I think we all want. I love those pants that I wore on stage. It's the cashmere sweater that every time I wear it, Cheryl goes, that is my favorite sweater on you. It looks great, feels great, and I don't have to have 50 things in my closet. So, like I am, refresh your wardrobe with Quince. Go to quince.com/SB for free shipping and 365-day returns. Now available in Canada, too. Go to QUINCE.com/SB for free shipping and 365-day returns. Quince.com/SB. You may not know that when we started Stacking Benjamins, it was a blog. And even then, just the startup cost, I remember thinking, is this the right thing? And what if I write things and nobody comes, right? Well, luckily, that didn't end up happening. But starting something new isn't just hard. It's terrifying. There's so much work. You're not sure whether it's going to work out. You're not sure if anybody's going to read it. And then we change it to a podcast. Is anybody actually going to listen, right? What if nobody wants all the stuff that we have? Well, had I used Shopify, it would have been even easier, because with their expertise, their helpful tools, and their easy to use platform, that's something that would have made Stacking Benjamins more effective much, much more quickly. Shopify is the commerce platform behind millions of businesses around the world and 10% of all e-commerce in the U.S. Names you've heard of like Heinz and Mattel, Shopify, Gymshark, Aviator Nation, Allbirds, also all Shopify. Get started with your own design studio with hundreds of ready-to-use templates. Shopify helps you build a beautiful online store that matches your brand style. And best yet, Shopify is your commerce expert with world-class expertise in everything from managing inventory to international shipping to processing returns and beyond. And did I mention that iconic purple Shop Pay button? It's used by millions of businesses around the world. It's why Shopify has the best converting checkout on the planet. It also helps boost conversions, meaning less carts going abandoned and more sales for you. So you're stacking Benjamins much more quickly. Time to turn those what ifs into with Shopify today. Sign up for your $1 per month trial today at shopify.com/SB. Go to shopify.com/SB. That's shopify.com/SB. The inspiration for today's discussion comes to us from the Wall Street Journal. This piece was written by Ashley Ebling and Richard Rubin. The new tax rules that can get you a bigger refund this year. There are 7 of them, OG. So let's dive into exactly how we can maybe help our stackers keep more money. We'll also link to this if you have a Wall Street Journal subscription and you missed it on our show notes page at stackingbenjamins.com. First of all, the standard deduction. Bigger, up by $750. This one's going to be easy, OG. I mean, your tax software is going to do this one for you, but the standard deduction up to $15,750, that's a $750 increase from a year ago. So there's a few dollars.
And that's the single one?
That's the single standard deduction.
Yeah. And the other thing that this helps too, by the way, is it makes it so if you're, because I think married joint is, I mean, is it double? Is it 31?
Married filing jointly for 2025 is 31.5.
If you're not going to be at the $15,000 level or $32K level for married filing joint, it eliminates all the record keeping. Don't worry about it. We're back to like, well, I got to get all my stuff ready for taxes. It's like, there's not a lot of stuff anymore. If you're not donating a bunch of money, if you don't have a bunch of mortgage interest, if you don't have a bunch of property taxes, which are, you know, limited in some places, and that's one of your, I bet that's one of your items on your list here, property tax changes. But if you're not at 32K, then don't stress it. You just take the line item and go. The good news is that the tax software, CPA, TurboTax, whatever, is going to calculate all that for you anyway.
There truly isn't much there that you need to do. Like it's just that's going to happen. Now, if you're 65 and older, you're also getting $2,000.
You get a little kick. Yeah. Kicker.
additional standard deduction.
You guys have that to look forward to here shortly. That's cool.
There's also the new senior deduction for an additional $6,000. That's a big one. That's going to last just the next 3 years.
Mm-hmm.
Let's talk about the SALT deduction because this was a huge difference. It is up to $40,000, which is a $30,000 increase over last year. This is one of the big changes in the big, beautiful bill. What is the SALT deduction for people that don't know what that means?
Well, until this year, you were limited, and this all goes back to the 2017 tax law change. Between 2017 and today, you are limited in the amount of deduction you could claim for state and local taxes. That's what SALT stands for. So your property taxes, your state taxes, you used to be able to exclude that income basically from your federal tax. Well, because only rich people pay taxes, they limited that to $10,000. Well, that kind of backfired because they went, oh, actually, turns out other people pay taxes too, not just the
Uber wealthy
billionaires and trillionaires. So they changed it, and now you can go up to 40K, but it's still limited by income. So there's an income threshold, and it decreases. Nothing that you have to keep track of because the software or your CPA will calculate this for you automatically. But if you're in that sweet spot of not quite making a bunch of money and still have a lot of taxes due, whether it's property taxes, real estate taxes, what have you, or state taxes, local taxes, you get a little bit of a benefit there, which paying taxes on taxes kind of sucks. So I get that.
Yeah, that deduction, by the way, those numbers, we can just go over that, begins to phase out for taxpayers who have a modified adjusted gross income. That's the income at the bottom of the first page of your tax return. By the way, if you've never gone through this, just take out a tax return and read the lines, and it'll start to make sense exactly how this stuff works. But modified adjusted gross income exceeding $500,000, or if you're married filing separately, $250,000. The deduction reverts to the previous cap of $10,000 for people with a modified adjusted gross income of $600,000 or more. So for those people, they'll still see a little more hurt. Brand new one this year, OG, tips income deduction. Talking to our friend PT, who is an accountant and also the creator of the FinCon conference. Saw him at a conference last week. And he was talking about the number of creators when he's doing tax planning. He's like, is there an opportunity to get tips? Is there a way for your audience to tip you? Are there a way for people that you work with to tip you? Is there a tip? Now, you got to be very careful, like he said, and you don't want to classify something as a tip that's not a tip. But this is $25,000 as an income deduction if you're somebody who's working in the service industry.
Yeah, I mean, again, this has to be beyond reproach here. Ultimately, the tip income has to be from business that is qualified to get tips. You can't just be like, I'm a garbage man and part of my income is tip income. Like nobody tips their garbage people, And so that's not a thing. And it's very difficult to reclassify your income as tip income if you've already, if you don't have the system set up. If you work in the service business, if you're a server or you work at a coffee shop, your paycheck already shows that. You know what I mean? Like they already calculate that in there. And so it's easy to take advantage of that benefit. But to go back in time and be like, well, actually, $25,000 of my income was tip income, probably not super easy. The other thing that I read about this was if it's a mandatory tip, it doesn't count. So like, for example, let's say that you work at a real fancy restaurant.
I was going to say, so like every restaurant now?
Well, yes. But I was thinking about it in the context of like, you've got an 8-person table, you're at the big fancy steakhouse in town, and they say, we automatically include a 20% gratuity on parties over 6, right? Like that's very a common thing to see. Apparently, that's what this article said that I read. I didn't read the tax code. That doesn't count because that's not a gratuity. That's a automatic service charge, basically. So a lot of stuff to still come. Basically, if you don't work in a tip business, don't try to make part of your income tip income. And if you do work in a tip business, or if you're the owner of a tip business, you really got to tread carefully and get some pro help here on how to classify this, because it's not super clear and easy.
PT works with people in the online world, and a lot of these people have Patreon, right? Maybe people listen to podcasts where they have a Patreon or something. And he's talking to some of these creators about, hey, is there an opportunity for a Patreon? Because This is maybe another income stream if you're somebody that works online, and B, it also is a tax opportunity that might not be here forever.
Yeah, maybe.
Next up, overtime pay deduction, $12,500. Again, work with your tax accountant on this one because a lot of stipulations on overtime pay. You can't start reclassifying your income as overtime pay, but if it has been historically, there could be a deduction there. Auto loan interest deduction new this year of up to $10,000, OG.
I mean, have you looked at the price of a new car recently? Interestingly, that has not had an effect, I don't think, on car sales. From what I've seen in terms of manufacturer data and retail car sales, nobody's buying new cars right now. It seems like interest rates suck. And apparently people are finally tired of spending $120,000 for an Oldsmobile or whatever the hell, cost to buy one.
For a smart car.
One of those things now.
And he calls us old, and he's referring to Oldsmobiles.
Fun
which
fact.
is a make that hasn't been made in
An
decades.
Oldsmobile was my first car that I bought myself. Believe that or not.
What's the first car you bought yourself, Doug?
First car I bought myself was a Chrysler Horizon. Is it a Dodge Horizon? Same vehicle. And just 10 short days before I paid it off, it was found in a lake.
Wow.
And no one knows how it got there.
Right. Was found.
No, the crappy thing is I still had to pay it off. It's not like I did it.
Okay.
It got stolen. And
I can't figure out how the insurance company found it out there.
Are you kidding me? I had public liability, public damage only on that car. There was no theft, nothing. That was a total loss for me.
And it was gone. Mine was a Chevy Monte Carlo with the ceiling that no longer stuck. How the ceiling,
the hood liner, the headliner was.
Yes. Yeah. All came down.
Yeah.
It was good. I tried to put a new radio in that. I bought one of these aftermarket stereos because it really didn't have one. I put it in. I didn't know what that grounding wire was for. I had no idea. So I got the two hooked up. I hit the ignition,
cranked it
with my hand on the radio. And I just felt this weird buzzing sensation. And then I turned the TV off and it shot me out of the car.
The radio.
It was, as I found out what the grounding wire was for.
You were the grounding wire.
I was apparently the grounding wire. Yeah. Little electronics education there, as it were. So these different tax rules, if you live in a state with high state or local taxes, obviously, I think you want to look at the SALT deduction. If you're somebody that works where you get a lot of overtime or you work in a traditionally tip field, you definitely want to dive into those with your tax team. If you have a child, the maximum tax credit went up by $200. Let's see what else we got in here. Of course, we mentioned 65 and older. We've got the $6,000 deduction for people 65 or older. We also have this new car. If you took out a loan to buy a new car, as much as $10,000 in interest, which to OG, to your point, could be 1/10 of the interest that you paid on that high interest loan on that.
It's crazy how much these things cost now.
$1 car.
And they're like unfixable too. I'm not handy in any way, shape, or form. Like I could change a tire and I could change oil if I had to. All the technology that we think is super cool in cars makes it almost impossible to fix because you need a computer engineering degree. And then on top of it, all these companies are now charging you subscriptions for different things, which is kind of interesting. Also, oh, did you want heat? You wanted the heated seats to work?
Right.
Oh, that's $8 a month. It's like, are you effing kidding me? I don't know. Old man yells at cloud.
Mm-hmm.
A friend of mine yesterday was telling me that their elderly parents just had to replace their furnace that was 46 years old. Furnace.
Amazing.
46 years old.
Yeah. They were in for a shock. Huh?
It all had this one little part every time that just needed to be replaced. And the furnace person was like, this has been a beautiful machine, easy to fix, same problem all the time, inexpensive part. And now we have to replace it with something that's a whiz bang thing that's going to die in 10 years. And it's going to cost you $18,000.
Yeah. I mean, I just got an email from Wemo, right? The company that does like the home automation stuff.
Sure.
They were bought by Belkin or went the other way. Anyways, they just were like, oh yeah, all that stuff you have that you bought over the last 5 or 8 years. Yeah, we're just not, we don't use
just
that anymore.
doesn't work.
Yeah. It's like, sorry.
Yeah. It's incredible.
Can my light switches still work? No. Just buy new stuff.
Yeah. Duh, just go buy it again. We will link to this in our show notes page at stackybenjamins.com. In the second half of today's show, we are going to dive into another piece that talked about all the different tax things that you should be looking at, or at least 8 other smart tax moves that you should look at any year, 2025 or any year. We'll dive into those. We also have our TikTok minute, but first, we're going to talk taxes. When we talk about today's date in history, Doug, some guy a few years ago had a little tough time with taxes. Well, actually, I think maybe started to solve the problem.
Well, let's just see where this takes us, Joe. Hey there, stackers. I'm Joe's mom's neighbor, Doug. And let's talk IRS, because it was on today's date back in 1992 that one country music and Hall of Fame recording artist settled with the IRS over his tax bill. The IRS said he owed $16.7 million in unfiled taxes, seizing his bank accounts and padlocking his properties. What singer, who recorded hits like Always on My Mind, Whiskey River, Bloody Mary Morning, and my personal favorite, I Gotta Get Drunk, settled with the IRS for $9 million? I'll share his name and more of the story as soon as I make sure I go hide my wallet from Joe's mom. That woman likes to levy taxes when you're not looking.
Dell PCs with Intel Inside are built for the moments you plan and the ones you don't. They're for those all-night study sessions, the moment you're working from a cafe and realize every outlet's taken, the times you're deep in your flow and can't be interrupted by an auto update. That's why Dell builds tech that adapts to you. Built with long-lasting batteries so you're not scrambling for an outlet, and built-in intelligence that makes updates around your schedule, not in the middle of it. Find technology built for the way you work at Dell.com/Dell PCs. Built for you.
Insurance isn't one size fits all. That's why drivers have enjoyed Progressive's Name Your Price tool for years now. With the Name Your Price tool, you tell them what you want to pay, and they'll show you options that fit your budget. So whether you're picking out your first policy or just looking for something that works better for you and your family, they make it easy to see your options. Visit Progressive.com. Find a rate that works for you with the Name Your Price tool. Progressive Casualty Insurance Company and Affiliates. Price and coverage match limited by state law.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
Hey there, stackers. I'm on-time taxpayer, as far as you know, and guy who wants the IRS to know just how little money I make, Joe's mom's neighbor, Doug. Today, we're shining the spotlight on a singer who owed the IRS, according to them, over $16 million. Of course, according to OG, I always owe him $20, so I know how that feels. The singer blamed his accountants, Price Waterhouse, for setting up all kinds of tax shelters that I guess the IRS didn't think were all that sheltery, because they sure found them pretty easily. He released an album in 1992 to try and help his situation called The IRS Tapes, Who'll Buy My Memories, which included outtakes, bloopers, and lots of glimpses into the creative process. So who was this singer-songwriter now in the Rock and Roll Hall of Fame? Of course, it's Willie Nelson. And now here comes the Poncho and Lefty of podcasting, Joe and OG.
All the federale say. Could have had him any day. Love that song. OG, you big Willie Nelson fan?
I wouldn't say a big.
But it's like you can't not be a casual fan. Like you hear a Willie Nelson song, you're like, oh, that's good. I'm like you. I'm like, yeah, not a big fan, but still.
Right.
Seemed like a cool dude to hang out with.
I think he would be. He's always baking something.
Yeah.
Maybe himself. You know, he ended up suing his accountants for $45 million, saying that he didn't know how this stuff worked. And Price Waterhouse came back, goes, dude, you were in all the meetings. Like you knew exactly what we were setting up. Don't say that you're not.
Ignorance is not a defense.
Yeah, they eventually settled out of court and everything was private. You have no idea how that ended. But
he got like a 45% discount with the IRS when he settled there. So that sounds like a strategy.
Well, even more than that, because I think they originally thought, Doug, they originally thought he owed way more than that $16 million they were going after him for. Like originally they said he owed like, I think 28 million. So just a huge, huge discount.
Wow.
So there's your lesson. Just cut another album to help pay your taxes, sue your accountant, and life is good. That's maybe not the lesson that we need from that. Hey, time for our TikTok minute. This is the part of the show where we shine a light on a TikTok creator who's either doing something brilliant or air quotes brilliant. Stacker Jen sent this one in. Jen was wondering the same for us as what we're going to hear in this video, guys. How much money do you think comedian Nate Bargatze has made now? Speaking of Willie Nelson, most people in Dallas, you know, to have somebody who will fill that big arena. What's the big arena where the Stars play, OG and the Mavericks?
American Airlines
Arena. Like filling that up one night is an incredible feat. Nate Bargatze sold out 3 shows, sold out incredible. One and had to add another one and add another one. 3 shows for this comedian. Dude's rolling in money.
He's got a little extra in his checking account these days.
So he's super wealthy and obviously becoming very popular very quickly. If you haven't heard him, the dude's really funny. Dusty Slay, a funny comedian, but I bet 90% of our audience doesn't know who he is, but still very funny. And then 2 other comedians, Aaron Weber and Brian Bates. They've been doing a podcast together and they were doing a live show and they took questions from the audience. And Jen wants to know the same for us as what they ask Nate Bargatze, Dusty Slay, and the rest of these comedians.
I know that you guys are all on the road together. There's only 2 hotel rooms available. Who's rooming with whom?
Oh, man.
Very easy.
I think Nate's got his own room.
That's exactly right.
I like that. And I guess I sleep in the middle because you need the plugs for the CPAP.
The other 3 in one bed, and Dusty says, I'll sleep in the middle because the other 2 need the plugs for the CPAP machines for them.
Joe, if it's us on the road, I'll just say right now, you and I are bunking together. Absolutely.
I think we vote for OG to have his own room.
Yeah.
Jen, to answer your question, all 3 of us vote. OG gets the room.
I would rather sit in a hotel lobby and drink coffee all day, all night, like stay up all night and just play on my phone than share a room with another human being. And not even my kids. Nope. Like if there's only money for one hotel, I'll sleep in the car. It's not happening ever.
It is wild, Doug, because I've been in a hotel with OG before and I walk downstairs and here is OG at like 4:00 in the morning. And I'm like, what's going on? He's like, there's this woman up there, Mrs. OG, that's making me share a room with her. And I refuse.
No, she's fine, obviously. But I remember one time my after school activity that I was doing and we had to stay the night. And the guy that I traveled with was like, hey, we should just drive back. And I'm like, no, it's kind of long. I'm going to stay the night. And I could tell he was just kind of like, I don't know that I want to spend the money to, it's a commitment and that's cool. Like I get that. And so I was like, listen, I have enough Marriott points, not a flex, just I have enough to get us a room at the Fairfield. It's like, they're like 17,000 points. So that's totally fine. And he's like, okay, cool. That works for me. And so we walk in there and I'm like, check it in. And I'm like, and then he needs his key too. And she pulls up, she's like, okay, here's your key. And we walk up to the 3rd floor and I'm like, all right, this is me. And he's like, what do you mean? I was like, yeah, you're like 2 rooms down, bro. It's like, did you buy me my own room? I'm like, yes. Like, I am not going to stay in another room with another human being.
It is worth the money.
I would rather have fewer Marriott points.
When we went skiing and the fin turn came, we got a place that had like 2 separate, it was like a condo, 2 separate bedrooms in a central living area. Thank God separating the 2 bedrooms because I heard noises, Joe. I don't know what goes on in there, but I'm glad. I think I know why he wants to be by himself because things happen in that room.
It's like an exorcism. Reminds me of that joke.
Yeah, it is. It's like Linda Blair.
What do you mean, an exorcism? That's a joke. It's not an Nate Bargatze joke, but it's a joke.
That's another day, or we can't share that one.
Oh, I'll tell you guys. I'll tell it later.
Okay. All right. Time to move. Thanks, Jen, for that TikTok minute. And yes, OG gets his own room. And I think we all agree. Exactly. It was very easy for us to figure that one out.
Oh, yeah. No thinking.
Let's dive back into tax planning for this beautiful Monday, because this other piece from alliedtax.com that we'll link to in the show notes has 8 areas of your life that you should really look at in any given year to have a better tax strategy. Number 1 is OG, and this is huge, just retirement account maximization. Make sure that you're just maxing out your retirement. You want a tax break and you want a better retirement, max out those retirement accounts.
At least to the employer match contribution, right? If your employer does, a 50-cent match on the first 6%, you got to be doing 6, because it's a free 3%. It's a free 50% return on your money. So absolutely have to take advantage of that. And then I'm a big fan of contributing as much as you possibly can for no other reason than out of sight, out of mind. Like if you make $100,000 and you can save $24,500 this year in your 401k, whether it's pre-tax or Roth, immaterial, and live on the rest and, do that. When you make $200,000, it's still only $24,000. And you make $300,000, it's only $24,000. The sooner you get to the max, the sooner you can go like, okay, that box is checked. I don't have to do that one ever again. Like easy, it's not easy.
Yeah.
Get there.
Well, and I like a suggestion here because, the strategy is, well, I can't afford to do that right now, or I can't afford to put the max in. When you get a raise, if you get a raise in 2026, pay yourself first with that raise. Like do the bump with the raise to help yourself get there. Like you get 100%. New income. Second on their list, get into tax loss harvesting. Now, I often see people in their 20s, really excited about tax loss harvesting. These aren't the people that really need to do it. It truly is. If you've got money in brokerage accounts, take advantage of this idea of tax loss harvesting. How do you do that, OG?
I'm with you. I think that this is a big headline that has very little impact for the vast majority of people. The only thing that I would really pay attention to is if you have crypto. There's no wash sale rules in crypto right now. Let's say that you go, hey, I want to buy, $1,000 of Bitcoin. And a week later, it's down to like $700, right? Because that can happen, right? I would sell that day and rebuy it that minute, because you get to write off that $300 loss, and then you reset your cost basis back to $700. The downside of doing it with little dollars is the transaction costs, and that may or may not be worth it. But capital gains losses are only beneficial to offset other gains or other capital gains of something down the line. So if you're like, I'm going to tax loss harvest this $8,000 of this mutual fund that I lost money on, and then I'm going to turn around and do like, okay, cool. But for what? Like if it's just a line item on your tax, like you can only deduct $3,000 a year above your gains. It's not zero, but it's not a lot either. So this is a maybe for me.
Yeah. Third on the list is health savings account, triple tax advantage. If you've got a health savings account available, this, I think after you get past the match in your 401k, could be the number one place to put money, because you can use it later on for retirement if you want to get very similar tax advantage for retirement, but you also have it available for healthcare. Like, I don't know. I think the HSA is the way to go if you've got one available.
HSAs are great. You got to be careful of how much cash your HSA requires you to have in the cash portion. You could spend an entire year contributing to an HSA and never get to invest $1 because your company, the HSA company mandates a certain amount of cash. There's, again, balancing act here. Is it worth hanging on to all these receipts and record keeping for 2 decades to get the tax-free age 65 thing? Or is it just better to use some of it as you go?
Yeah, I remember my friend Belinda Rosenblum from ownyourmoney.com, who works with entrepreneurs on their tax systems and setting up better automation. And I remember her talking about the HSA with us, OG, and going, you know what? It is great if you can keep those receipts for 3 decades, but don't let good be the enemy of perfect. If you're somebody who just has an HSA and you're using it tax-free to pay for your stuff now, still beautiful. Like it still is a fantastic opportunity for you. So don't get all worked up about, oh my God, I'm not.
Yeah. And if you have a few years where you don't have a lot of expenses, I mean, that money will pile up. It's what, $8,500 now is the limit. So, if you have 5 out of 10 years where you don't really use it or use very little of it, you could easily have $50,000, $80,000 in an HSA. And now your HSA is going to make as much money invested as you contribute, right? So you get to kind of that break even point where it's going to start snowballing on top of itself. So I think it's great to use for a little bit of now money and potentially future money.
The next several get a little more granular now. I think those first few are pretty widespread, but for people that are in retirement, especially strategic tax bracket management, meaning looking at those different pots of money. And if you're not in retirement yet, making sure you got enough money in the Roth or the money that comes out tax-free bucket from the top of your tax triangle, enough money that's flexible, and of course, deciding when and how to take money out of that pre-tax, strategically thinking about that a little bit, I think can go a long way. Thinking about it a lot.
Yeah. I mean, all of the decisions that you make when you get toward retirement are all going to have secondary effects also. Things like Medicare premiums and the RMD requirements in the future and that sort of thing. So paying attention to it, I think when you're early on, making sure that you just have some flexibility. Should I do pre-tax or Roth? Yeah. I don't know, whatever you want. I mean, there's an argument on either side of that, but I think you better get to retirement with a bunch of money in pre-tax, a bunch of money in tax-free, and a bunch of money in brokerage. Your definition of bunch is subject to interpretation, just so that you've got the flexibility to say, okay, this year I need X dollars. I know this much is coming from Social Security. Like how can I manipulate the other 3 buckets to get the income stream that I need at the lowest possible cost, basically.
It's funny, Doug, for several years, we talked about the dumbest discussion in personal finance was the whole share checkbook thing.
Oh yeah.
Do I share a checkbook? And you just poking your eye out like, oh God,
I
we're
hate
having this
that
discussion again. Yeah. I think the Roth versus pre-tax, lately we've got some people coming out going, no, you should definitely do pre-tax because of blah, 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 blah. And then there are people going, no, you should do all Roth because of blah, 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 blah. I think this is an idiotic argument because we don't know where tax brackets are going to go. So why would you optimize for something that we don't know versus give yourself the flexibility to go wherever the hell the river moves?
Oh, you think it's dumb because there's an obvious answer?
No,
I think it's dumb because there is no obvious answer.
Okay.
Because everybody's solving for something that we don't know. We don't know where tax brackets are going to go. So we don't know if taking all pre-tax today is the best decision. We also don't know where tax brackets are going to go. So we
today might not be the best because other people on that argument have said, do it now because it could get, essentially what they're saying is do it now because it could get worse. It's the devil we know right now. So take the bullet now. That's where I thought you were going with that.
Well, people say take the bullet now because your tax bracket is going to be higher today than it will ever be if you're in your prime working years. So go ahead and take the pre-tax today to take the biggest tax break that you can get right now because you're going to pay less tax when you're in retirement.
All right.
Well, that's a false thing.
Or your money compounds into infinity and you're 80 years old with $13 million in an IRA. And I would argue that might be the richest you ever are in your life at that point.
Yeah, we just don't know. Give yourself flexibility. StackyBenjamins.com/tax triangle if you're lost on what the hell we're even talking about. But staying flexible really gets you where you want to go. At number 5 on here, I won't spend a lot of time on charitable tax giving strategies. Oh, gee.
Well, there's been some changes to that this year for 2026. The amount of money that I'm going to screw this up because I'm doing it off of memory here, but it's like the amount of your income, the first 1% of that you give away isn't counted from a tax standpoint. So if you make 200,000 and you give 2,000 to charity, you don't get to write off the 2,000. Somebody's going to write in and go, that's not it. Something like that. All that to say that it matters, right?
Here it is. It is a 0.5% floor. Starting in 2026, individual taxpayers will only be able to claim a charitable deduction if their contributions exceed 0.5% of their adjusted gross income. This means smaller donations may no longer provide a tax benefit unless they're combined or strategically timed.
Weird.
There's also a 35% cap on itemized deductions for high-income individuals. Total itemized deductions, including charitable contributions, capped at 35% of your adjusted gross income.
So it may make sense to skip giving this year to give it all in, another year, give twice as much this year, skip a year. Or if you don't care about that, or if you're one of the people that you're just taking the standard deduction anyway, then much ado about nothing.
If you are in a state that has a state income tax using 529 education savings plan optimization, they work through an example of this. Couple in a state with tax deduction. A couple in a state with a tax deduction contributes $10,000 to a 529 plan for their college. They immediately save $500 on their state taxes, assuming a 5% rate. That $10,000 grows to $25,000 over 15 years. When their child attends college, the entire $25,000 could be withdrawn, of course, tax-free. It would have had some capital gains taxes if they had not put it in the 529 plan. So using 529 plans for college, a good idea. Number 7, income timing and deferral strategies. I think we already got into that. And then number 8, asset location optimization, meaning having your funds, OG, that have high dividends, maybe mutual funds with lots of manager movement inside where they're buying and selling, and there's capital gains taxes being created, even though you didn't move, your fund manager did. So you get a bill putting all that stuff inside your tax shelter, and then having the more tax efficient stuff outside your tax shelter can really work on your behalf. We'll link to these in our show notes page at stackingbenjamins.com. Guys, let's wander out on the back porch. It is Super Bowl week, and we'll get into that in a second. Before we get to the Super Bowl, Stacker Scott.
Yeah, I mean, he noticed something is really, like, this was the breaking point for him. All he wants to do is go out to the movies, right, with his partner. He just wants to go a couple of tickets to the movies. Talk about sticker shock. $287. Yeah, $287.97
just
for
to
two
go
of them
to
to go to the movies. And he's a member of that. It's like the club, the AMC club.
There's more to that story.
Stubbs. No, hold on. Wait.
Okay, so I'll take you through it. I mean, it's a couple of tickets. And even he was in that discount club from AMC called Stubbs. And even the discount didn't help that out. So a couple of tickets, some large popcorn.
Yeah, how much were the tickets?
Fountain drink.
How much were the tickets?
Tickets were, looks like about $16 a piece.
$16 each to go see a movie. 32 bucks
That's
already.
A lot of money right there.
Yeah.
Large popcorn, fountain drink, and some hot dogs.
Yeah.
Almost $290 for the two of them.
How much was the popcorn?
$10.
Yeah. Still way overpriced, but anyway. And the drink?
Drink was $7.50.
Yeah. And how much were the hot dogs?
Hot dogs, well, they were, I'm not sure what the line, I could do the math, but it does appear that one of them was pretty hungry. There were 28 hot dogs.
Only 28 hot dogs. I mean, you go to the movie, OG, the movie theater, and you have 28 hot dogs.
Yeah, 28 hot dogs for $223.72. This still seems like price gouging to me. 28 hot dogs is normal. Who doesn't eat?
Who doesn't go to a movie theater? Who among us throw the first stone, cast the first stone if you don't go to a movie theater and have 28 hot dogs while you're watching your movie?
These are $8 hot dogs.
What's your take on the delivery to your seat?
At a movie theater?
We don't have that theater in Texarkana.
Oh, really? Oh, that's only what we have. I've been in the movies in a long time, but that's only what we have. I was reading something the other day that said it was somebody like Matt Damon or somebody was like, they absolutely hate that, right? Like you're meant to like lock yourself in a room and focus all your attention on this artwork that they just did, basically, right? Instead, you're like pressing buttons and playing on your phone and like, oh, anybody need some more hot dogs? Okay, cool. I'm going to order 4 more hot dogs. And then, the guy comes in like a waiter and, and kind of in everybody's way. And I'm kind of there. Like, we don't need like couches to lie on.
Yeah.
I haven't been to an Alamo Draft House in a while, but when I went, Alamo Draft House used to do that really well. Used to actually do it where they would, I don't know, kind of sneak in underneath. And,
but it's already nasty. Like when the floor is all sticky and
but not at the Draft House. That was a nice place back when it was pre-Sony. Like it was good stuff. I used to love going to that theater. It was a totally different experience than going to our local cinema.
It's like a drive-in movie. Yeah.
How much were the 28 hot dogs there?
I probably have 11 gajillion bucks. But they had real butter for the popcorn. I did appreciate that.
Artisan pizzas and stuff. It's like, come on.
So good.
Get a box of Jujubes and
yes, that was fun, Scott. By the way, thanks for posting that in the basement.
There's also some fun coming up in about a week from yesterday. The big game, Super Bowl, is about to happen, in which New England, host of a fine Benjamins After Dark group, will be beating the Seattle Seahawks by a score of 28-24.
You threw down the gauntlet right there.
I mean, I'm just spitting facts. I mean, I love the Sam Darnold story. It's inspiring, but Drake May is a beast, and they're going to pull it off.
He's a beast that scored, 10 points or 14 points in the final 2 games?
He's just a winner. The guy just wins.
Okay.
Plus, he's
against
he's
a second-string quarterback that hadn't started in 5 years, but sure, yeah. Wow, They really took it to those Broncos 10-7. Ooh.
I like this. Even on the episode, we're getting a little heat back and forth.
So we've got a Boston Benjamins After Dark group. We got a Seattle Benjamins After Dark group. Those 2 teams are in the Super Bowl. You do the math. Look, Tucson, if you want to have a team in the Super Bowl, start your damn group.
That's all you got to do.
Yeah.
We're actually having our meeting with Tucson. That's pretty exciting. Hopefully getting that rolling. And by the way, if you're in Boston, you're like, wait a minute, we don't have a group yet. Yes, we do. We just have not had a meeting yet. So the group is active online. Put in Stacking Benjamins Boston, and you will see the group get in. And when that first meeting happens, it's right around the corner, Doug. And you've already seen in the basement, they're starting to throw barbs at each other. The Seattle group founders and the Boston group founders.
I really thought we did have a group in Boston already, because I remember talking about a meeting, and I even talked about that it was right next to the Dunkies.
We've had meetups there when I've come to town, but we have not had a monthly meetup group. Well, we do have one. It is founded. It is rolling.
Nice.
We just have not had our inaugural meeting yet. So Seattle off and rocking with our buddies Chris and Cole out there in Seattle. If you're in Seattle and you're not going to those meetings, what are you waiting for? Oh, also, by the way, we figured out where our meetup is going to be in Seattle when I come out there for Retire Meet, the Retire Meet conference, guys. We will be on Thursday, March 5th, 6:30 in Capitol Hill at Elysian Brewing. We've had a meetup there before. Great time at Elysian Brewing in Capitol Hill, neighborhood of Seattle. So come join us, Seattle Stackers. We'll be there at 6:30 having some fun. Thursday, March 5th. Head to stackingbenjamins.com/meetup to sign up for that. Love to see you guys while we're there. That's going to just about do it today. We got a couple more resources. Number one is, if all this tech stuff is really got you down and you're like, I don't even know where to begin, we have a tax guide. We have a series of guides, but our tax guide is fantastic. We update it every month. stackingbenjamins.com/guide. But number two, we talked about tax planning. If you're somebody that's like, well, wait a minute, I just need a better team than I have today. Not tax pros, but financial planning pros that help you put the puzzle together so that when you go to your tax team, you already have all the pieces in the right place. While OG and his team are taking clients, head to stackingbenjamins.com/OG. And he and Anna and the rest of the team, happy to talk to you about how they can help you make better financial planning decisions, which include tax decisions in 2026 and beyond. All right. Those are a couple of cool resources we got. But the last resource we always point to before we say goodbye is Doug telling us what the big 3 things are that should be on our to-do list this week.
Oh, I'll tell you, Joe. First, take some advice from our headline. Taxes are always changing, and so is your personal situation. So take another look at your taxes, and let's keep some money in your pocket. Second, got to make a tough hotel room decision? Here's one that's not tough. Let OG sleep by himself. Everyone will be happier, trust me. But the big lesson, don't tell Joe's mom accountant jokes. She's got no sense of humor. Listen to these humdingers. What kind of humor does an accountant have? The self-deprecating kind.
Nope.
Yep.
That's not the joke.
She didn't like this one either, but it's amazing. Where do homeless accountants live? In tax shelters. Duh. Right?
Yeah, the first one was not self-deprecating, Doug. Self-depreciating. It's got to be self-depreciating.
But they both mean going down.
I think it was self-depreciating.
The joke has to be self-depreciating.
I like how Doug's telling the joke. Can't figure out why mom doesn't laugh.
Okay, whatever. We can analyze these later. those are hilarious. I think we can all agree they're just hilarious. Of course, I've always thought there were three types of accountants: those who can count and those who can't. Looking for better tax help? How come I didn't get the laugh track on that one?
You got the crickets track, OG? Quick.
Agree to disagree.
You got it.
Looking for better tax help? Check out our tax guide. We update it every month so that you've always got the latest intel in your pocket, and we include a tax checklist at the top so you know right where to look for opportunities. Find it at stackingbenjamins.com/guides. This show is the property of SB Podcast, LLC, copyright 2026, and is created by Saul-Sehy. You'll find out about our awesome team at stackingbenjamins.com, along with the show notes and how you can find us on YouTube and all the usual social media spots. Come say hello. And oh yeah, before I go, not only should you not take advice from these nerds, don't take advice from people you don't know. This show is for entertainment purposes only. Before making any financial decisions, speak with a real financial advisor. I'm Joe's mom's neighbor, Doug, and we'll see you next time back here at the Stacking Benjamin Show.